Welcome to WorldWire. Please subscribe and hit the bell icon for more breaking updates. The global casino industry once revolved around giants like MGM Resorts, whose dominance seemed unshakable from Las Vegas to Macau, but the last decade exposed their vulnerabilities. Crippling debt, market saturation, and global disruptions brought even MGM to its knees. This slow decline forced the industry to rethink its playbook. Massive debt-fueled expansions were no longer a guarantee of success. The lesson was clear. Over-reliance on established markets and old strategies was a recipe for stagnation. As MGM faltered, competitors saw opportunity in agility and new frontiers, shifting focus from outdoing rivals in Vegas to pioneering untapped regions. The industry's mindset changed. The next big win would come from bold moves into uncharted territory. This set the stage for a legendary brand to make a multi-billion-dollar bet, not in a familiar gaming hub, but on the pristine shores of the United Arab Emirates. The question became, who would have the courage to lead the industry into the unknown? While others hesitated, Wynn Resorts seized the moment with a $10.5 billion vision. Wynn Al Marjan Island, the UAE's first integrated resort with a casino. This wasn't just another hotel, it was a leap into a region where gaming was once unthinkable. By choosing Ras Al Khaimah, Wynn sidestepped Dubai's competition and became the anchor for an emerging tourism hub. Holding a 40% stake, Wynn brought its signature luxury and operational expertise, betting that the Middle East was ready for ultra-luxury gaming. The move defied conventional wisdom, reading the region's push for economic diversification and global tourism. Wynn's gamble, that the UAE's ambitions would outweigh old taboos, creating a supportive regulatory environment. The announcement sent shockwaves through the industry. Analysts scrambled, competitors were caught off guard. With a $3.9 billion construction budget, Wynn's confidence in its brand and its ability to navigate the Middle East was clear. This wasn't just a new resort, it was a bold statement and a challenge to the entire industry. Wynn's move redefined what was possible in global gaming. The world was watching to see if this audacious bet would pay off. Wynn Al Marjan Island is more than a hotel, it's a landmark designed to redefine Middle Eastern luxury. Rising 305 meters, the bronze-tinted tower will offer 1,300 lavish rooms, suites, and villas, all with panoramic Gulf views. The casino, occupying just 4% of the resort, is seamlessly integrated, catering to global gamers while welcoming families and non-gamers. Beyond gaming, guests will find a luxury shopping esplanade, 24 restaurants and lounges, a world-class spa, and a bespoke theater for top-tier entertainment. The resort's holistic approach blends gaming, hospitality, retail, and entertainment, creating a magnet for diverse tourists. Wynn isn't importing Vegas to the desert, it's crafting a destination tailored to global and regional tastes. The company projects annual EBITDA of $450 to $600 million, betting on the resort's unique appeal. Wynn Al Marjan Island aims to be a reason to visit the region in itself. Wynn's project hinges on a seismic shift in UAE law. For decades, gambling was strictly banned, reflecting deep cultural and religious norms. But the UAE's leadership, eager to diversify beyond oil, quietly paved the way for change. In September 2023, the General Commercial Gaming Regulatory Authority, GCGRA, was established, signaling a new era. Led by industry veteran Kevin Mullally, the GCGRA set out to create a world-class regulatory framework for gaming and a national lottery. This gave operators like Wynn the legal clarity and confidence to invest billions. The move is part of broader reforms aligning the UAE with global standards and attracting foreign investment. A regulated gaming industry is now seen as a powerful engine for tourism, jobs, and non-oil revenue. Wynn's UAE venture is bold, but fraught with risk. The regulatory framework is still evolving. Unfavorable laws or high taxes could threaten profitability. Cultural acceptance is another hurdle. Wynn must balance international allure with local sensitivities to avoid backlash. Financially, Wynn is investing $900 million of its own capital, banking on optimistic projections for tourism and high roller appeal. If visitor numbers disappoint or the global economy falters, the project could become a heavy burden. Competition is looming. If Wynn succeeds, rivals like MGM and Caesars will rush to enter, eroding its first-mover advantage. Wynn's gamble could either set a new standard or become a cautionary tale. Wynn and MGM's contrasting strategies in the UAE reveal two visions of risk. Wynn is the pioneer, betting big to be first, aiming to capture the market and set the standard for luxury gaming in the Middle East. MGM, meanwhile, waits in Dubai, ready to act if laws change, letting Wynn take the initial risks and learning from its experience. Wynn needs a new growth story. MGM is focused on optimizing its global portfolio and minimizing risk. Both approaches have merit. Wynn could reap huge rewards or face costly setbacks, while MGM risks missing out by waiting too long. The race is on. Will boldness or patience win in the Middle East's new gaming frontier? The answer could reshape the industry's future. Wynn Al Marjan Island is set to transform Middle Eastern tourism. The region, long known for luxury shopping and family attractions, now adds integrated gaming to its arsenal. The resort's construction and operation will create thousands of jobs and spur growth in related industries. Tax revenue from gaming offers the UAE a vital new income stream, funding public services and infrastructure. Wynn's presence signals to global investors that the UAE is open for business, even in complex sectors. If successful, the project could inspire other Gulf nations to reconsider gaming, opening vast new markets. Wynn Al Marjan Island isn't just a resort, it's the start of a new era. As Wynn races toward its 2027 opening, the stakes couldn't be higher. Success would make the resort a global destination, attract high rollers, and cement Wynn's reputation as an industry leader. Failure, due to delays, regulatory hurdles, or lackluster demand, could turn the project into a costly misstep. For the casino industry, a Wynn triumph would trigger a rush into the region, making the UAE a new global gaming hub. The next few years will determine if Wynn's $10.5 billion gamble pays off or becomes a cautionary tale. The world is watching. The outcome will shape not just Wynn's future, but the economic destiny of Ras Al Khaimah and the Middle East's gaming industry. The dice have been rolled, and the game is on. The boundaries of global gaming are about to be redrawn,